Okay, we are live. Roy, happy Tuesday.
Happy Tuesday. Yeah, it's been a while since we've moved Bootleg to Monday, and then it's like, oh, wait, yeah, Tuesday. Sometimes it
Yeah,
happens. Of course, the market was closed yesterday, and there wasn't really a lot of news. People were enjoying their holidays. Hopefully, you enjoyed your day off, even though you don't celebrate Memorial Day like a Canadian. Come on.
yeah, no, I
Yeah,
wasn't off at all. I had work, so I couldn't enjoy it.
you,
But
you should have
the market,
celebrated Memorial Day with us Americans. You know you want to.
I know, dude, the market was closed. I don't even know how people celebrate. Like that's torture.
So, like, we've got a number of topics that we're going to talk about, but before we get started, I'm kind of curious, like, if you guys in the comments, if you're overseas, if you're not in the United States, I'm kind of curious if you pay attention to the market at all when the market is technically closed, but it still trades in the overseas markets. Tevis, what about you? Are you just like, American markets are closed, it doesn't matter, or yeah, you
Yeah,
treat it like the overnight price action?
exactly.
Yeah.
Yeah, I exclusively, and I think I have like tax benefits to do like the Canadian market, and I still only trade the American market. So
I mean, like, unless you're buying Shopify, I'm not really sure. Maybe some energy names in Canada, Abcelera, but I mean, like, Micron's American, and we're going to talk about Micron today. A lot of the AI names, AI space, we're seeing in the market a greater separation between AI names and not AI names. And it's one of those times where, it's easy to ask, where does this train stop? And of course, Micron set new all time highs, briefly entered, and let me see if it currently is there. $1 trillion club. Yep, 1.01 trillion. So it has joined the $1 trillion club. It's no longer super exclusive. It's still exclusive, but probably 5 years from now it won't be like that big of a deal anymore. But for right now, it is. So, Tevis, we're of course going to talk about Micron. We have some notes on SpaceX and Tesla as well. And of course, the macro, which might be telling us when that train actually stops. Where do you want to start, Tevis?
yeah, I mean we can start wherever. I'm happy to start at the AI trade.
All right. So, yeah, first and foremost, Micron is really interesting. It was the market hated it after about 3.5 months ago. After they reported earnings, they crushed earnings. The market didn't believe it. It's done this before. Ended up buying Micron, and then I had stop losses, and I got stopped out, which is really frustrating because it wasn't a large amount of money I had. I didn't, but regardless, it was like, oh man, I might be the guy that actually lost not much money, but a little bit of money on Micron this year, and everybody else made bank. So it's a frustrating thing, but the reality is that does sometimes happen. I saw a really interesting note, and I think you sent it to me. Let me pull it up here. On specifically Micron, some comments that were regarding Micron as well. So here are two things. So this is the Kobayashi letter. Says on May 22nd, right ahead of the closure. Of course, that's when the news drops. Trump said Micron is great and that company could invest over 100 billion in New York. Today, as the markets reopen, Micron surged 19%, adding 150 billion dollars. And of course, there is a little bit more right here. We're not going to necessarily play that, but yeah, this guy is maybe the pumper in chief. Like oftentimes when he says, "Hey, it's a good time to buy stocks," or he mentions a name, outside of I guess Palantir, but even then it got a little bit of a bid. It seems like a lot of people follow into that trade. So my question for you, and also for those that are in the comments, is this just obviously the market had some catching up to do in Micron. It was way underrated, way undervalued. Are we beyond that point, and are people just speculating and trading? Are we in euphoria right now and we need to be careful? Or is there a lot more to come in this? And I'm not talking about over the next 10 years, obviously there is, but over the next year.
Yeah, I mean, look, I think we are getting a little bit of euphoria. I think the market is largely right now in some type of K shape where AI is catching a bid and SaaS is largely continuing to get sold off. Although we had a day last week where the AI trade sold off and SaaS caught a bid. Service now was up like 20% or something. I think it's really interesting that Trump basically came out on Friday and flat out said, "Hey, buy and hold Micron," because it gave me flashbacks to last year when he came out and said, "Hey, we should buy Intel," and that was back at $20, and now it's going to be significantly higher than that. Previously, he's also said, "Hey, look, we should buy Nvidia, we should buy ServiceNow, we should buy Dell, we should buy Micron." So I think it's an easy trade to make. That when you see somebody who is openly talking about his trades and he's in power and he's saying like, "Hey, this company is going to benefit." I mean, look, Trump gave the buy signal last year on Liberation Day, saying it's a great time to buy stocks. And the market had like its single best day in recorded history on that day. So, uh, I mean, we talked about buying Micron last week. I said, "Hey, Roy, should I buy it?" And we were talking about potentially having it pull back to 500, but in reality, I don't think it's going to stop until it crosses 1,000 and probably 1,200. Be honest with you.
Yeah, I mean, definitely there could be more that comes, but is Micron, obviously Micron's not the only name that is getting a lot of appreciation. It seems like every single name in the semi space. Photonics was hot today. Air Test Systems broke an all-time high, briefly touched 111. I think it settled at around 110. AMD is continuing to pump and do well. Intel, I didn't look at, but I imagine it's probably up a fair bit. Yeah, 3%. It's kind of flat, for a name that's in this space. But the one name that's in this space, Tevis, that has not gone anywhere is NVIDIA. What is going on with that? Do you have any thoughts on beyond, like, the one thing that I think it really is with NVIDIA is you did not solve that stupid puzzle. You left it behind in Canada. You're no longer in Canada right now. And I think that that's why the stock is struggling. It's as good a reason as any. But honestly, like, it's a little bit puzzling to see Nvidia actually be a little bit down on a day like today. Now, I don't expect it to be up, if Micron's up 20%, that it's going to be up 20%, but a percent or two. Now, there always is news. There's some Qualcomm news and chips and a deal that came out with ByteDance, a TikTok parent. But like, regardless, why do you think it is that the market has mostly ignored Nvidia, continues to ignore Nvidia right now, especially on a day like this? It doesn't signal anything. And by the way, MJ Reagan, thank you so much for that donation in Canadian money, but it automatically converts to American. So, all right.
He's not even Canadian, bro. Yeah, look, with, with regards to Nvidia, I think you have to take into account the size. Nvidia did a run up from 170s to 230s range, and now it's just taking a breather. The wider story, Roy, of why is Nvidia slow and why are all these other ones fast is because Nvidia, I think, is the first association that people make with the AI trade. They're the supplier for everybody. But all of these other companies, they're catching a bid because in large part, they're getting re-rated. And so they were trading at a valuation that was significantly discounting what they're actually doing. I mean, Micron, if you look at the actual financials for it, is still very cheap um, relative to their forward earnings projections, even in spite of the fact that they are up like 200% in the past, however, many weeks. So that's largely to me a re-rating story. That's not really euphoria or this like parabolic move that's unwarranted. It's like, hey, the market has got new information and the market is re-rating it as a result of that new information.
All right, so it's been a little while since I've looked at this. Let me go ahead and take a quick look at where Micron is at as far as the forward ratios, and give it just a second here. Valuation, and we're going to look at price to earnings. Of course, there's a lot of forward multiples you can look at, but yeah, this is what Tevis is saying. Quarterly or not doesn't really matter, but yeah, it's actually it's kind of flat. That's something. And a lot of it is analysts coming out and continuing to increase expectations. If we look at estimates Let's go ahead and do that real quick. Revenue consensus annual estimates, and yeah, right here. So this was, of course, when they reported. They reported back here. Oh no, let's see, January, February, I think. And yes, since that time, there's been a massive re-rating on on the revenue. Let's look at earnings as well. Thought I was on EPS for a second. And yeah, so massive, massive increase in EPS as well. So it's one of the reasons what's fueling this. Of course, NVIDIA doesn't look very expensive either. Now, I do think, and you can see here based on the estimates, there is more cyclicality in a business like this than I think most that are in the AI space. But so it's not going to get to something, well, it probably won't. Like, who knows with the euphoria, to a 30 forward price to earnings or something like that. Even with the insane growth. But yeah, it can continue going up for a while. I know RSI is overheated on names like this, but when there's re-rating, when people understand how far behind they are on projections, it can remain heated for a long time. So personally, like for me, I'm not chasing Micron. I don't think that's the best time to get in. Obviously, when you run and you do like a 200% in 6 weeks, you got to be a little bit careful with that. What about for you, Tevis? Are you selling everything and going full port Micron?
No, I mean, I would have already done that $150 ago by investing on Friday. But yeah, I'm not really doing that yet. I don't know, man. I don't like, here is the level where I'm scared that I'm gonna be chasing, even though I think everything is gonna keep going higher, because I don't think we're in a bubble. I think that it's largely warranted. I think we're gonna talk about it in a little bit later in the show around this AI demand and relative to cost. Um, but I'm largely conflicted because you see the chart and it says this parabolic rise, and you're like, okay, you're going to buy the top. And on the other side, you see the numbers, and the numbers make sense. Let me bring up this comment. Thank you, Cash Mula, for the $5. Seems
Good
like he
name.
bought Nebius, and Nebius bought him a nice watch. Roy, you're cool too. Thank you very much.
Yeah.
I think like my camera or my internet is just like really crap. I don't know. You guys can confirm, but I feel like I'm like lagging on everything.
You are. I can hear you just fine, but you've either become a very good ventriloquist and are able to project your voice while your lips are not moving. But yeah, I think it's hotel internet. So if you end up not, well, there you go. Okay, I don't know if you refreshed something or not, but you disappeared for a minute. If for some reason it completely disconnects and I'm on my own, I guess it's payback for me losing power last week. So, um, so on this, it's actually kind of interesting. Like, so Silicon Photonics has continued to get a bid. A lot of the names, one that's not, and I do see a question on this. So, we're going to hit Q&A, of course, towards the end of this. But I saw, Mary had asked, what about Poet? Is it Canadian? I thought it was actually a question about the business itself. Like, I actually had a video that came out based on a lot of things that I looked at following that most recent short report. And I'm like, hey, it's not pretty right here. It's not going to zero. I mean, if you look at their cash and everything, it does seem like that they have a real product, kind of. But yeah, that's one that I think that eventually, over time, the market will sift out some names in all these spaces. Like some of the Silicon Photonics names, like AAOI, might be like one that just like even here, if we look out in 5 years, is like stupidly cheap. Air Test Systems, I think has more to come. Yeah, that's a scary thing. Is a lot of people like if you, it's one of those like truisms that if you overhear like while you're shopping at Target or something, people talking about Silicon Photonics just randomly, that's a sign. It's like, well, maybe I should take some profits and be a little bit careful there. So, but like legitimately, a lot of these technologies, it feels like that there's a lot more to go over the long term. But yeah, sometimes like Dylan mentions, AAOI is basically flat. There's other names that are in the space that weren't getting any bid, like Navitas, NVTS. I ended up just doing a little swing trade on it, and it's up like 50% from when I bought it. It was not a meaningful amount of money, so it's just a little fun thing. I'm like, gallium nitride will probably get a bid, and there we go. So we'll see that, but like over time, like so initially when there's big moves up and down, everything just moves in a basket, and then the market will kind of sift out the quality versus those that are just pumping because it's along with everything else. But it can take a lot of time. The other area that seems maybe even more speculative and more euphoric here is, of course, space. ASTS, I believe, put it in an all-time high today. It was up a lot. Rocket Lab has been pumping. A lot of other names. There's some that I forgot of since 2021 just because they've not been worth investing in. Probably still not worth a long-term investment, and they're pumping like a meme stock right now. So, is that really where the euphoria is, the dangerous euphoria, or have you been keeping up with what's happening in that space?
Yeah, it's reminiscent of 2021. I think that okay, you have like part one is the re-rating story, and then part two is all the other smaller companies that were previously unheard of that sort of just catch an enormous bid. I don't know how many of those are still going to be around when the music starts to slow down. Like if there is a fundamental demand imbalance that gets cleared out, or if there is a hitch in the AI story, like these companies can wipe out a lot of investor capital. And easy come, easy go, right? Like you have these companies that are going parabolic in one direction, but don't forget, if you've been around 2021, 2022, like they can go parabolic in both directions.
Yeah, and again here, like there's names like Rocket Lab. I think is probably pretty far ahead of itself. But it's a really good company. It's a good stock. Like long term, if you're looking at it, you're probably going to be fine. Voyager is one that's been getting a bid. It's one that I've looked into a few times. I've never pulled the trigger as far as investing. Looking at today, I'm like, oh man, I wish I, bought hindsight's 2020 at the beginning of March. But great business. I don't know if it's a great investment long term or not. But regardless, I mean, pretty much none of these are profitable. Now, SpaceX itself, I think, is the big part of the reason why, of course, things are pumping. And there was some interesting news that came out with SpaceX. Where is it? Okay, here we go. Well, actually, sorry. 1 second. Thought I had it pulled up. Okay. So they won another contract. And if you can throw this up here, Space Force awards Elon Musk's $2.29 billion, the SpaceX, to develop space-based military data network. Of course, there's a lot that's been talked about. Bezos in his interview was asked about something that SpaceX is probably going to be heavily involved in the future. It looks like I lost Tevis, so I might not be able to share my screen all the time. So I'll just be doing a lot of talking. Hopefully he's back. There he is. Good. Okay, great. So we've seen a lot of revenue change, monetary change, which is going to get people even more excited. I saw today that somebody was expecting, an analyst was expecting over $2 trillion in terms of valuation when this actually IPOs. I believe it was over 2.25 trillion, which is just crazy. But again, when you go from fairly modest revenue to essentially doubling your revenue with Anthropic using your data centers, awards like this as well, which this isn't million, this is billion. It's massive. Now, they do churn an incredible amount of money. A lot of it's just because of CapEx. There's been some acquisition type of things that they've also done, which is part of the reason why. How long do you think that the space stocks outside of SpaceX stay heated? Is this hey, they continue to pump until this thing IPOs? Or do they keep pumping along with it once it actually IPOs?
No, I think once it IPOs, it drags everything down. SpaceX has been the driving force for the pump in space stocks in general as an anticipation play, because you attach a $2 trillion valuation to SpaceX and all of a sudden Rocket Lab at 30 billion or 40 billion seems incredibly cheap. Like, yeah, absolutely, you should buy that up. And the moment that SpaceX IPOs, My hunch is that it's gonna be sold off. I mean, it might go parabolic on day one, but then subsequently get sold off over the coming months. And if you don't believe me, look at everything that's IPO'd over the past year. I mean, look at Cerebras, like that just IPO'd last week and it's down 25% over the past week. It's like tried and true. And this is not, you know, this is very logical stuff that we're talking about because they have this massive euphoria. And I think once you have the sell off in SpaceX, I think there's going to be a lot of profit taking in the space stocks in general.
Yeah, and it feels like honestly, like the IPO day, anything could happen. Even the first month or so, but it's a very, very rare IPO, and it's usually the ones that nobody is excited about, nobody talks about, most people aren't even aware of, that actually does well and continues to do well without a big, big pullback. And those tend to be the exception that prove the rule. So yeah, I agree with you. Like if not by the time that it IPOs or before the time it IPOs, when it does, it'll probably pull down that whole basket, which is probably not, maybe not for every name, but a lot of names pretty far ahead of themselves. But congrats for people that are in that business.
Now, I think the interesting nuance here, Roy, with regards to SpaceX is not that it's going to sell off post IPO. I think we are expecting that as our base case. It's the fact that a Tesla IPO, or sorry, a Tesla SpaceX merger is starting to become priced in. And it was low percentages. I mean, there was a couple of people talking about it. I made a whole post around why it makes sense because of the ownership stake. And I know, Elon's targets that he's been public about of wanting to have over 20 to 25% ownership in Tesla to be able to influence the direction that the company goes. And he has like an insane amount of SpaceX. He has like 42% of the shares. And then he also has Class B shares, which have 10 votes for every one vote of Class A shares. So I think he controls like 80% of the voting power in SpaceX. And the pumping of SpaceX to $2 trillion valuation, I think, is deliberate so that they can have leverage to do like a merger of equals. Or, I mean, at this point, SpaceX is even bigger than Tesla, which would thereby give Elon even more control otherwise. Once that merger does happen, however, it's going to be accretive to both those companies. So that's, I think, the more interesting piece is like, okay, how long after the IPO is the merger going to become front and center? Because we could have a dip with profit taking post SpaceX IPO, and that can be bought up pretty quickly as we are anticipating the merger with Tesla in the coming months.
Yeah, it'll be interesting just to see. Tesla's, of course, pumping along with the other names as well. There is always some Tesla specific news too, but those are definitely seeming like that they probably will trade in lockstep. So maybe they'll even become the same play at some point. Now, Dylan asked an interesting question. He said, "Does SpaceX bring down the broader market if it has a pullback?" My normal answer for IPOs, even massive IPOs, would be absolutely not. They're not in the index fund. IPOs just kind of do this thing. It's not a big deal. The thing is, NASDAQ has rewritten their rules regarding this type of listing. And so that's really no longer the case. It's going to be, I don't know if day one, but early on, adopted much earlier than what traditionally their own rules and bylaws had indicated. So, so lockup period is something like, if you guys are not aware of it with IPOs, basically those that have held the company, one of the reasons, there's two reasons why you go public, mostly. I mean, there's some others as well. One is to be able to get a lot of revenue and money for the business, which you can use to actually accelerate the underlying business. And the other is so the insiders can have more liquidity, especially after a nice big pump, to be able to sell their stock. It's harder to do that in private markets. You tend to have to, you're very, very restricted there, versus there's some restrictions, of course, in the public market too. But the IPO lockup period is one of those that traditionally is 180 days out. So, so it is something to be aware of. Do you think that this will impact negatively the index fund when we see the inevitable pullback in the IPO with SpaceX?
Yes. Yeah. I mean,
That's scary.
it's like it's volume weighted, right? Like it's just so big. SpaceX IPOing, having the rally that I think it's going to have on day one, I think it's going to be like the sixth biggest company in the world, seventh biggest company in the world.
Well, it depends what Micron does between now and
Sure.
then.
But you get my point. Like this thing is, it'll definitely move space stocks like ASTS and Rocket Lab and others. But I think it's also going to move Tesla. I mean, look, I've talked about this in previous podcasts where I have this theory that the Tesla and SpaceX investor overlap is so high that I think people are going to be taking some profits on Tesla and rotating into SpaceX, or taking some profits on SpaceX and rotating them into Tesla, because both of those names trade interchangeably on a story, and the story for both of them is Elon, right? And the overlap of Tesla investors to SpaceX investors would be huge. Because if I own, let's say 30 or 40% of my portfolio in Tesla, it's my largest position. It's like I'm fundamentally hitching my wagon to Elon. I'm making a bet on him. It's no different with SpaceX. The financials make no sense. It's entirely about the story, right? And so if you think about, okay, what implications for Tesla does a SpaceX IPO have? Well, it depends on if that Tesla investor base is more bullish on SpaceX and Tesla, and they can rotate some capital between the two. But then I think the wider piece of all of this is the merger, which I think Elon will try to rush through as quickly as possible after IPO, so as to capitalize on that momentum. And because if you think about it, if you have a big fade out of the stock, then he loses some of that leverage in that merger negotiation, right? Or in that merger conversation. And so it behooves him to be as quick as possible so that SpaceX maintains a higher market cap than Tesla, maintains the negotiating leverage there, and ultimately Elon will have more control at the table when they do merge. So I think it's going to be IPO and then immediately leading into merger conversations or rumors shortly thereafter, like days, weeks thereafter, not months. And I think we're going to have that like happen immediately, so as to keep the momentum high as much as possible.
So with that, let's say it IPOs at 2.25 trillion. Tesla continues to pump, gets back to $1 trillion valuation. We're at 3.25. It's really not that far away if they do merge, and there will probably be euphoria around that as well. Do you foresee a scenario when Tesla X, or whatever this company is called, if it does happen, becomes the largest company by market cap in the world?
Absolutely. 100,000%. Now, you got to keep in mind that an aggregate conglomerate company always trades at a discount, or very often trades at a discount to the holdings it has.
Yes.
That's like, I mean, just look at Google, right? If they spun out YouTube, YouTube could be a massive $1 trillion business on its own. Um, but if we think about the sort of X conglomerate, like Tesla already has a stake in the SpaceX, man. Tesla's already working with XAI. It just makes sense on so many levels, but the voting control thesis is, I think, the strongest indicator that these two are going to merge. Now, once they do merge, it's going to be really interesting to see the terms of that deal, whether it's like a pure merger of equals, it's 50-50, or how that might work. And then, of course, they're going to have to come out with this unified vision of like, okay, how does Mars all of a sudden play into the sustainable future on Earth story? It's probably going to be around like Optimus production and something that marries the two. But
And Tevis is frozen. I don't know if you can hear me, Tevis, but hop back in if they do kick you out. I did want to talk also about two other things. One is the newest purchase that I made in the market. This one's a swing trade. I have a time frame in mind, but not an exact time frame, and also a target. And then also what can actually stop this rally. If there's things that we're positioning, that we're doing, that we're concerned about. Yeah, staring contest, bro is locked in. Yes, Tevis is. So without further ado, Tevis coming in again. So I ended up buying. Actually, do you know what I bought, Tevis?
no, what did you buy?
It's one that we've been talking about. and I did both a buy, and then I did another buy, and then I ended up writing puts. Coreweave. Coreweave is one of those names, and somebody mentioned it earlier too. It's like, hey, it hasn't gone anywhere either. Of course, this was the day where NBIS hadn't really moved that much. Coreweave didn't move very much. I believe IREN was fairly stable today as well. So they were excluded from the rally today. IREN's up 5%, so I guess it went up a little bit, a good amount today. Just looking at the valuation, looking at what they're building, it's a little bit puzzling to me why it hasn't moved more than it has. It's moved some. They have a 92 billion, I believe, backlog. They do have debt, and it's certainly a good chunk of what they have in the books. But, even though like I'm concerned with some companies that took on debt, over the last couple of years, anticipating that there'd be massive drops in terms of interest rates, they'd be able to easily refinance it. Now we're actually looking at consensus being slightly in favor of at least one rate cut this year. Coreweave, like BG, NBIS is diluting rather than doing debt. These are companies that have massive cash flows that are growing, increasing. Revenue is just absolutely ramping. So it's a very different picture than debt. But I'm kind of curious what it would take to get you on the Coreweave train, if anything, and what you think might be holding that name back. Is it really just the debt?
I think it's a debt. Yeah. And I did know about CoreWeave because we talked about it on Saturday. But yeah, the debt is the thing that's definitely holding me back. That's pretty much the only thing that I'm not buying. They're ahead on most other metrics, or they're ahead on their build out. Let's say. Look, man, I think it's something that NBIS can definitely catch up to them. I think it's good to diversify, but it's not too much diversification. You still have a lot of sector exposure.
Yeah.
The other piece there is around expectations, and I don't know because I haven't heard any CoreWeave earnings or whatnot. Like they have the same partners as NBIS does for the large part. I don't know what their expectations are for future build out and the growth. And I saw this post earlier this week, Roy, that this guy was basically arguing that NBIS's prepayment strategy was fundamentally worse than CoreWeave's because financing with debt is just better off, is what he was advocating for, saying that NBIS is not doing it because debt financing would invite financial scrutiny. And he was saying that if NBIS were to do it, they wouldn't be able to command the best rates as a result of their debt profile being riskier. And I was just like, okay, that's well, actually, maybe before I share my thoughts, I'd love to hear your thoughts on like, you know, what do we think about the prepayments versus the debt financing as a wider strategic piece, like pros and cons to either or?
Yeah, I mean, I ultimately like I guess just to set the stage for either business, I don't think it's bad. Like IREN, I mean, you could even look at Oracle and throw that in, but we typically talk IREN, CoreWeave, and NBIS. As far as like differentiation between their offerings, I think that it's at this stage demand is so immense that it doesn't care. It's kind of like caffeine junkie, me, who is like, dude, I need caffeine right now, and it's my least favorite flavor of Celsius. I'll drink it up if that's all that there is, gladly. So, but eventually there'll be some diversification there. As far as this strategy, like debt versus dilution, and of course the prepayment as well, which is actually probably the best of all worlds, but you can't always get that, especially enough to be able to fund all the capex because it continues to go up in price. I actually prefer dilution slightly, just because there's less. So I think that there's more upside for CoreWeave through the debt model, but I think that there's also more risk. So, in other words, if something happens, and we saw news, and we can of course play it and look at it, that Microsoft talked about how expensive AI is, that they're shifting not away from it, but they are shifting away from Cloud Copilot over to their own GitHub applications through, well, I think I said Cloud Copilot, Cloud Code over to GitHub Copilot, which, I mean, it makes sense. It's eating their own dog food, so to speak. But, if we see a lot of that following, or if there's a big push like for NIMBYism with the midterm elections, that a lot of the people that are elected are just anti-AI, anti-data centers. They're putting out rumors that are just completely false, like water concerns and stuff. I'm not saying that all of them are false, but for the most part, we're talking about data centers being a huge water hog and ignoring almonds. It's like, okay, that's weird. But if we do get no scenario where, for whatever reason, the demand is not as pronounced, which I don't foresee, I don't expect, and all of a sudden that revenue ramp is not as substantial as it was before, which one has taken on more risk? It's the one that's taken on debt, because you have to repay that, versus the dilution. It's already done. It's in the past. It was probably done at a higher level as well. But again, like, you can go from a very tiny float to something that's just a massive, ridiculous float. That if NBIS, and I don't know if the Arcadia's ever talked about this or not, but like, long term down the road, they're going to be massively profitable. Are they going to be buying back shares? Probably. But I mean, the share price for if assuming no splits, it might be $2,000 a share, which is awesome because you made a ton of money. But they won't be super effective. It's the same problem that Palantir has. They're sitting on $7 billion, no debt. They're not doing buybacks right now just because President Trump's like, oh, anything related to defense can't do buybacks. But even when they were, they just weren't effective at that valuation at all because of that massive run. So on the other side, like, let's assume things work out very favorably, that the revenue ramp continues unabated, that the demand is even more there, that they have just immense pricing power, which I think is actually like the base case, honestly. It's not even the extreme bull case. Then all of a sudden you get a scenario where Coreweave can very easily refinance. They've actually done a refinance at 6%, which is really not that bad. They can also pay down their debt. Their credit rating will continue to improve. And all of a sudden, they've not done any dilution. That is, cutting aside all the technological differences between NeoCloud and bare metal, that's a significant advantage. But again, there is more risk. That's at least how I see that. How do you see that?
I just don't understand it. Logically speaking, let's just say you have 30 billion or 25 billion dollars worth of debt because you've refinanced it down from 35 billion dollars, right? And you've refinanced it down from 10% to 6%. Bro, that's still 6% on 25 billion dollars of debt. Like, whatever bank is giving you that is like popping the champagne bottles at this point. Now, sure, it's maybe a more nuanced argument to say debt versus dilution, but when you compare it to prepayments, like, I don't understand, maybe what I'm missing something. I don't understand the downside of prepayments, because in the debt scenario, you're spending your money, you're paying interest, right? And you're hoping that there's going to be a buyer on the other side of that after you build out. Versus in the prepayment scenario, you're getting fronted the money. So you have a guaranteed buyer at the end of that because they're on the hook for, I mean, they've already prepaid for it, right? And they're not just going to like back out of it, right? So I think there's like a more solid commitment on the prepayment side of things. Number one. Number two, you're getting asset-backed financing, right? You're using Microsoft and Meta's reputation, and you're raising money off of Meta's $15 billion commitment. And so it's just like you're leveraging your existing future commitments to get money at incredibly, much lower rates than pure debt financing. So I just, maybe I'm missing this point, but like, logically speaking, I just don't understand why I would go to debt financing at such high rates when I can literally leverage my counterparties to, even if it is debt financing, do it at much lower rates off of their commitments, or for them to pay 40% upfront and then they hold the bag if demand falls off a cliff instead of me.
Yeah, so I don't think that that's quite an accurate picture of Nebius, because it's not just that they are getting the prepayments and that's funding 100% of their capex, and maybe they'll sell ClickHouse or something like that, and so they won't dilute. Like, the reality is it's a both and. So with the prepayment, like, we can search for some downside, like relative, but realistically, like, that's the gold standard. That it's just amazing. That's great. But no, I'm talking about specifically the. Okay, well, actually, let me ask, because maybe I'm wrong on this. Do you think that Nebius is just not going to dilute again? It's all going to be prepayments.
No,
Maybe they'll
I
sell
think
ClickHouse.
they absolutely will dilute again, but it's going to be kept as a last resort. They haven't tapped into their ATM program at all, and they've had it approved and sort of just sitting there for a while. It's not going to be their first option. Why is it not going to be their first option? Because they have better cards on the table. They have better moves on the board that they can play. And so I think fundamentally the thing with me and Coreweave is like, okay, why does Coreweave not have the same? Like, if we say, again, I don't know the nuances here, so this is just me sort of flying blind a little bit. But like, if we just assume in this conversation, Roy, that prepayments are the gold standard, right? And raising money via debt and paying 6% is an acceptable trade-off. Like Jay said, I mean, they can cover it with their free cash flow, no problem. You'd still rather have the gold standard. You would still rather have Coreweave, or let's say, Nebius's 40% prepayment rate relative to the industry's 20% prepayment rate. Why does that discrepancy exist?
Yeah, no, and I'm just saying, like, that there's still a lot of dilution that's going to happen until Nebius no longer needs to do that. So it's a gold standard prepayment. Next, I would say it depends. Like, again, if the environment, and Tanner's here, he's invested in Nebius and also Coreweave. I'm curious if he sees it the same way that I do. That assuming everything plays out well in the AI space, the debt model is actually better, because you get the end of the road and you've created a lot more shareholder value. You've not had the dilution, which, I mean, all you're doing is paying 6% interest, which is nothing in the current environment where it's at. Versus, again, like, Nebius continues to pump, it's at $2,000 a share. You're not going to effectively be able to buy back that stock. Now, that doesn't mean that shareholders should be upset, because, like, that's a 10x from here. Like, that's happy days. That's amazing. But yeah, it's not. I don't know, the way that the market is looking at Coreweave. It's weird to me, because I'm looking at it like, okay, what's the downside? The only realistic downside is if something blows up completely in this space, and all of a sudden inference demand is just not there. They have no pricing power. It's like the opposite of the reality that we're seeing right now. Then the debt could become concerning, but that's the only case where I actually can see that.
Well,
Ne-
you're always running that risk, right? Because, okay, let's just say, what would we put the chance that the demand falls off a cliff in 27 or in 28? Maybe, I don't know, 5% or less. Maybe like 1%, just to make you feel better in this conversation. Let's just say 1% demand falls off a cliff. 99% is going to be robust and resilient. And we can talk about demand falling off a cliff with regards to like Uber and Microsoft and what they're doing. But let's just say it's 1%. We know that Coreweave is going to have higher capex next year than they have this year. Same with Nebius, right? They're going to continue to build out, they're going to continue to grow and try to maintain that same, execution. We know Coreweave's strategy is to continue doing it through debt financing. And so you're always going to have, at least, maybe, I don't know, maybe I'm thinking about this wrong, but like, I would always have a voice in the back of my mind to be like, oh, well, if for whatever reason the demand falls off a cliff, like Coreweave is going to be holding the bag. I would much rather have, even if it is a portion, like let's just say, 40% of the capex to be funded by prepayments, and then another to be funded by the subsidiary sales. Like, that's a much safer funding route from a dilution perspective, but also from a debt profile perspective, if the demand softens over the next couple of years. And I think that's a big part of why Nebius is trading at a premium relative to Coreweave right now.
Yeah, it still feels way overdone. Like, just relative to the quality of the names. unless the market was beginning to say, okay, bare metal was just not the way to go, which I do think like is a case that there's going to be some differentiation in the underlying tech and the neocloud that Nebius has been building. That's one of the reasons I think why it's been getting a premium. But it feels like that the disconnect is even wider than that. Like the risk, like we're not talking about relative to what they'll be earning over the next few years of that massive backlog. It's very, very minimal, with even with the 6% factored in. So like is there risk? Yeah, there's a tiny bit of risk there, but it's tiny. Now that risk will go up as they continue to accelerate and as they accelerate the build out, but it's not ever going to be like, oh man, this whole thing could blow up. I just don't think that's realistic unless we're expecting everything to blow up. And that would be a bad day for no matter what you're holding, whether it's IREN, Nebius, Coreweave, or some smaller names.
Yeah, that's fair. Shall we pivot to that risk and dive a little bit deeper? I want to talk to you about the Uber and the Microsoft story because I think that's a really interesting angle.
Yeah.
So maybe you can throw up the stuff that I sent you because I think my computer is just going to get fried if I try it.
Am I your
But
secretary?
basically,
All right.
What's that?
Am I your secretary? I see how it is. All right.
Unless
do you want the video first or Uber first?
Whichever, it doesn't matter.
Okay, let's do the video just because I have to tab it. There we go.
Yeah, so I think this is a longer. Okay, it's 1 minute. Yeah, we can play this.
Okay.
I spoke with a VP at NVIDIA who first flagged this to me. He said, oh yeah, for months, our costs for my team have been more for AI than humans. So that was the first flag. And then we started to hear this coming out in droves. Uber's CTO said he already blew out his whole budget for 2026 just on AI related costs. And obviously that means he's spending more on that than he's spending on human workers. And now I'm starting to hear, especially from startup founders, they're bragging about their AI bills being high because it's kind of this sign of like, yeah, I'm really ahead of
some
AI
flex of like, I'm blowing so much cash on this.
Exactly. But the whole point of this was supposed to be that it cut down on costs, expanded profits, especially for public companies. But it's unclear if that's going to be tenable.
When is that curve? I guess is one big question. But you have some of the data you have in your report is kind of fascinating. Worldwide IT spending is expected to be up 13.5% this year compared to just last year, over $6 trillion. Where is all this money going to?
Well, a lot of it is going towards token costs, which is basically like the currency of AI use. Also, of course, subscriptions. If you've got an enterprise contract with OpenAI, with Anthropic. So a lot of it is going towards these AI labs. The thing is, though, the queries that I'm putting into AI, those don't cost very much. It's for the people who are coding or using an autonomous agent overnight. But at some companies, especially the tech ones like Meta, they're encouraging that high token use because, again, they want to see and seem like they're really ahead in the AI.
All right.
Yeah. So I wish I, as a content creator, had that woman's enthusiasm for 13% year-over-year growth because she got like really like it's 13% year-over-year. But look, I think the interesting point that the commentator was making is like, look, AI is really expensive. Claude is really expensive for these companies. It's only going to get more expensive. Agentic use cases are going to drive up the token costs. And if these companies are not seriously scrutinous on the ROI, they're going to reduce their usage. And right now, it seems as though, AI can sure as hell write thousands more lines of code than any developer out there, but it's like, it's slop, right? There's a lot of hallucinations, there's a lot of errors, and I don't know how many companies are going to realize that and pull back and actually maintain some of their hiring for longer until we work out the kinks from a demand side. Or like Meta's stance, they're like spend, and like we'll spend their way to higher ROI and see you on the other side. What do you think?
Yeah, so I mentioned with and I'll read this too. Uber COO says heavy AI spending is getting harder to justify as higher token usage fails to show clear payoff in consumer features. I think the spending in part will become a little bit more nuanced, but a lot of these companies really value speed and effectiveness more than the actual cost or expense. Like if the cost is much higher than it's expected, but they're able to bring products faster than their competitor to the market and more quality products like twice as fast, their companies are going to do that. American companies, especially. With Microsoft, I mentioned earlier, just so it's not missed for somebody that might just be tuning in, it's not that Microsoft is going away from their usage of AI, but again, they're using GitHub with Microsoft Copilot more so than Claude Code, and that's the shift that's there. Which, I mean, that makes sense because, again, they're Microsoft. So why wouldn't you use your own product unless it was absolutely terrible? So I'm personally not too concerned by things like that. Like, we're going to see that. We're going to see a lot of companies that said silly things and did silly things with AI and just didn't think through the strategy, realize that the ROI just has not been there and that there's a lot more cost than they expected. Just because of the demand, token cost has gone up substantially as well. But I think that this is like looking at the internet in like 2002 or 2003 and saying, yeah, it's probably going to be used less over the span of time. It's like, no. But there is a risk. Again, I can't think of the name of the company, but the one that laid all those undersea cables that ended up going belly up, like massive capex, the ROI wasn't there. They were just ahead of themselves. And of course, the companies that inherited those lines did very, very well. So what do you think? Is this a big cause for concern for you? And if so, what are you doing with your portfolio?
Look, I think we're still so early on that the encouraging aspect is the positive growth that we're seeing in the AI trade. That's leading us to believe this is not a bubble because, in fact, the fundamentals of these companies, AI companies, are scaling relative to or in spite of the stocks going parabolic. And that's what we said at the beginning with Micron. It's like, hey, look, Micron looks parabolic AF and super euphoric. But if you actually look at the earnings and if you look at the forward projections, it's not really that crazy, all things considered. However, I think it's still early enough on, Roy, whereby the market will still have jitters over things like this. And we're seeing we saw a large number of layoffs this time around. And that's largely due to AI productivity gains or perceived productivity gains, supposedly. If for whatever reason we get more murmurs of, oh, well, the productivity gains aren't as big as we thought, or, we're not as efficient, like we didn't unlock as much as we thought, the costs are not going to slow down anytime soon. And I think that could really cause some short-term pullbacks because right now the story is what's driving the movement in the short term with a lot of this price action post earnings, right? So that's why I'm keeping a close eye on it. I don't know that it's going to speak to the long-term demand, but in the short term, yeah, like it could be volatile based on these things coming out.
Yeah, I'm saying, like it would be a healthier thing if token costs were actually falling. And of course, Javon's paradox comes in there where there's more usage. It's a lot more sustainable. There will be pullbacks in this, but yeah, long term, I'm not really that concerned. Although not everything is going to be
token costs. Yeah, and just to be super clear, token costs have fallen drastically. It's just we're using way more tokens than before. So like if
individual token costs versus there's a lot. Yeah, I thank you for the clarification.
Yeah, like I think you have like a 10x reduction in token costs, except you have a 100x reduction in the number of tokens used. So like you still have an increase overall.
Yeah. One of the other things beyond that that I think could possibly stop the rally is related to what's of course been happening in the Middle East with Iran. Supposedly a deal with Iran has been imminent, and I think we've been hearing that for the last 7 weeks, something like that. It's been a long time. maybe not quite 7 weeks. And myself personally, I don't know. It feels like the market is pricing that in, and it's a bit disconnected from what we're actually hearing and seeing. And I would love for things to be resolved. But if they're not, if things continue to persist, and yeah, there are some tankers and ships beginning to move through the Strait of Hormuz. Fertilizer costs, helium costs, LNG, oil, there's a lot tied to that in the Middle East. Some of that already is impacting inflation. A lot of it's just energy costs right now. But again, with all these commodities, energy is one of those things that flows and translates into inflation across the board, which is, so whenever it's resolved, that'll be great. But, you know, if we're in this situation for another quarter or two, Tevis, I do have concerns. And there's a few things that you can measure this beyond just inflation and look at. This is one of the more interesting. A lot of times I'll ignore this. This is University of Michigan's consumer sentiment. These gray bands are, of course, times of recession. I think that we can oftentimes overread and look into this because, again, you're talking to individual consumers who might see their individual situation but miss the big picture of what's happening. But we see, I mean, it's just not great. And this has been the reality for a little while. Individual sentiment has been extremely low for quite some time. We see that certainly that's been the case over the short term. And part of that is like, and I think this is maybe where the hate towards the AI, specifically in the AI trade, has been coming from, is not as Vlad Tenev, the CEO of Robinhood, says, because people can't get exposure to some of these private equity names that are in the AI trade, like Anthropic and, of course, the big one, OpenAI. But it's because they're not seeing the benefit themselves. They're hearing about all these people making gains in the stock market, all these investments, record levels of corporate debt that's being taken on to finance all these projects. And yet they may not be seeing the benefit other than they're playing around with a little bit OpenAI, ChatGPT, or something like that. Beyond that, and kind of tied to that as well, is if there was somebody whose portfolio was not sitting at all in semis and the AI space or anything that it touched, I mean, the reality is we're at a pretty steep disconnect right now between the S&P equal weight and, of course, the S&P 500 as it stands. And a lot of that reason for that disconnect is, again, some of it is the Mag 7, but a lot of it is specific to AI names that, like SanDisk, which has been introduced into the ETF and has just been pumping. Micron, of course, has been doing well. Avigo is not talked about enough, but it's absolutely just destroying things. You can see this disconnect, and it tends to happen in a bull market for sure. But man, that's a wide disconnect. So between consumer sentiment, between fears that possibly this might be higher for longer, like that's one of the concerns is we may see a scenario where, and let me say this too, like where I live, like in Houston, we're surrounded. It's the fourth largest city in America. There's a ton of people. There's people that are just making money and don't know what to do with it. But there's a ton of people on the lower end, and I know a lot of them. And man, they are just struggling to make ends meet. And I think that this might get more challenging and harder as time goes on. But these are sort of things like if we see a recession, which if Hormuz stays closed for 6 more months, it wouldn't surprise me if we begin to see that. That could also end the rally. What do you think on this, Tevis? And then once you talk about that a little bit, is there anything else that you see that realistically could stop this rally?
I saved something, but I don't know if I can find it in time now. But it was essentially like this macro research going back years where they were saying ahead of every midterm, there's like a large correction. And I thought that was really interesting because I remember, Roy, back in December when we posted those charts where it was like 100% of the time there has been a pullback ahead of midterms, and we were like, nah, man, AI is so like it's not going to happen this time. And guess what? Iran happened, and so it actually ended up coming true. And I saw another one of those, so if I can find it, I'll pull it up here. But largely, I think the Iran thing is going to end. I mean, I know it sort of had a little bit of last minute escalation today, and that's why the market faded a little bit throughout the day. Ultimately, we're going to go into the midterms, and I don't think Trump wants this thing to drag on. I don't think anybody can afford it to drag on. I saw a news statement yesterday where they were down to the very final bits of an agreement. I mean, we don't have an agreement in our hands just yet, so that should speak for itself. But the point is like I think we're closer to the end than we are to this thing dragging out for another few months. I hope that's the case. If that's not the case, then we're going to see a big pullback, and I think we could retest the lows that we saw back in February because the sentiment is just going to be so much worse if we're approaching an end to this thing and then we get a further escalation in a big way. Because a lot of that trust and rapport that was being built has been broken. But I do think we will ultimately get some type of ceasefire / agreement sooner rather than later. And then the market's focus is going to shift towards the midterms immediately, right? I think we could get a pullback in the summer. Maybe we might be due for one, honestly. But what I was saying to a friend earlier today when he was basically asking the same thing, I said, look, if we do get a wider pullback, I don't know. Like, I think the market is going to be continuing to be a K-shaped market. I'm not sure if AI is going to be the darling in the second half of the year as it was in the first, but I do see it being very scattered across different verticals. And I think 26 is going to prove to be a trader's type of market. We are euphoric, absolutely, in many ways. We've had parabolic moves. We had stuff that you only see in extreme greed. At the same time, there is a large handful of names that are extremely lucratively priced right now. They're just not in the beloved sectors. And so they continue to get sold off. And I think that's a really interesting setup for us for rotations to happen. And largely, we do know that they happen. We talked about this right before this latest earnings, where I said, hey, look, we could get a rotation to some big techs. And even within the big techs themselves, Roy, we've seen a schism, right? Like we've seen Google and NVIDIA for the large part, and these ones sort of catch a bid. We've seen Microsoft and Meta still be down and largely unloved. So we're getting breaks all across. The AI trades, hit a dart at a dartboard of the AI names, and I will stake you money that it's up triple digits year to date. Hit a dart on a dartboard of software names, and I will stake you money that they're down double digits year to date. It's the market we're in. You're on mute. You're on mute. You're on mute.
Yeah, so there are exceptions, certainly. Tevis isn't saying every single name, but yeah, largely that's true. Now, this right here is one of those things that I'm kind of curious. If Hormuz does reopen fairly soon, peace agreements are actually made, it sticks. Right now, we've shifted immensely from going into the year again, expecting 2 rate cuts, to right now, only a little bit under 50% say, hey, no rate cuts. And the rest, well, you can see it right there. 38.7% expect a hike, 10% expect 2 hikes. And we're not going to talk about these guys because that would not be a great reality to be in. Now, obviously, if Hormuz opens up, we actually see and begin to see that inflation is mostly transitory, that there is some that's a little bit durable. I think that obviously that will probably ease over time. And so I'm curious in that environment, I think that if we see that, then I'll between some seasonality features, between some midterm type of features, some tie-ins with crypto as well and regulation, that we see finance and fintech actually take off finally. But yeah, for now, this has been a massive overhang for them. Not so much for AI, because AI doesn't care about it. Micron is apparently a hedge against inflation or something. I don't know. But that would probably be my prediction if we get a Hormuz reopening. Everything looks good there. of a sector that is kind of hated right now, that in the fourth quarter might actually be beloved. And with that, Tevis has left because he realizes he doesn't own enough SoFi. He's going to buy some of that, buy some Figure, buy some BMNR, and he's back. I'll let him speak for himself. I said you had to leave to go buy some stocks that were in fintech, right?
Yeah, I'm really struggling with this internet, man.
Hotel internet, man. It's rough. What's your thought though on let's say Hormuz opens up? We're not living in the reality where it's persisted for a while. What is a sector that you think that maybe isn't as loved as much as it should be? Maybe it's performed very well, but what do you think outside of what's currently pumping, space and semis, might get some love in that second half, maybe in quarter four?
Oh man, you and I are gonna go dumpster diving into SaaS very, very shortly, my friend. We're gonna book some profits, get some covered calls, and get our shares called away in Air and in NBIS and in others. And we are absolutely going to start combing through some semi names. Interestingly, I know Chris Patel is big into this. I was hearing the thesis around this a little bit. He's big into cruise lines. I mean, he's been big into cruise lines for a while now, but I think it's an interesting thesis, like tying it to oil. So, like, if the war ends or when the war ends and oil prices go back down, what benefits from that, right? I think we could get a rate cut, in which case all financials would benefit. SoFi, Hood would all catch a bid. I think there's gonna future earnings will prove some SaaS is still very resilient. I mean, the CEO of ServiceNow is buying stock. There's also large buying across the board. I saw HIMS insiders were buying for the first time in years. I'm seeing a lot of insiders just buy. I mean, Anthony Noto, of course, $2 million worth of SoFi in the last month. It makes sense. There's going to be opportunities there, that's for sure, because the market will rotate. It always does, and it always will. And semis and space is not going to be the darling forever. It's not even going to be the darling for the rest of the year, I don't think.
Yeah, things can shift absolutely really fast. For software, like I don't know that I would go in hard or heavy into software specifically, unless it's a name like, and there's just a couple of them that I really like, and this is one of those. And I thought that this was a really interesting post. Chad is one of those dudes that's at Palantir that interacts a lot at on X. I've met him in person. He's a brilliant dude. He actually initially worked for Tyson and came over to work for Palantir, and just a brilliant engineer. So Apollo is one of those products that Palantir, even Palantir shareholders like myself, kind of forget about. We talk about Foundry, we talk about Gotham, we talk about AIP, and Apollo is like, yeah, it's there. But this was a very interesting post that I'm probably going to do a follow-up video on, so I'll probably save it for that. Thinking about like one of those natural demand needs for the reality of infinitely more code being generated, the attack vectors and identifications increasing at exponential pace, and the number of endpoints to deploy software is also increased exponentially, which is exactly what something like Apollo was designed to solve. So I'm not saying go all in Palantir, but it's been one of those laggards. Now, part of the reason why it's a laggard, like NVIDIA, is because they got ahead of themselves. I think especially Palantir was like it should not have been trading at $200. NVIDIA, I don't think it's really that far ahead of itself, but this is one of those things where like it's already growing extremely, extremely well. This is one kind of forgotten platform where the critical need for what it solves has exponentially increased, and I do think that's the right term there. And I don't know anything else out there that can actually solve the use case or the cases here. He says, and I should have left it on there, it is the power of ontology plus AIP plus Apollo that's the magic here. So it's not really designed to be a standalone platform itself, but yeah, the end-to-end deployment.
You want to know what I say, Roy?
What's that?
I bought Nokia. and you're like,
Yeah,
what?
tell me about that. Like, what's the thesis there on Nokia, and why are you getting in? It's for the old phones, right?
Yeah, exactly. It's just a nostalgia play. I had them when I was 13, 14, and now that I'm 31, I'm like, hey, you know what? Let's bring it back. Get me a nice little flip phone. No, I think the thesis is really interesting. It's really an invest and investigate type of deal. I bought a small amount, and I'm gonna write covered calls on it, and I'm gonna trade it more than hold it for right now. Yeah, I think Amit's post was something that like brought it to my attention, and then I started reading um, a couple of the main content creators in the space. I actually put out a post saying, "Hey, look, I'm looking for content creators to invite to the stock tank for Nokia," but a lot of insider purchases there, even though the stock has gone, from $2 in 2024 to 16.50 as of this latest close. You still have insiders buying. I think the Nebius stake is really, or not Nebius, the NVIDIA stake is really interesting. Um, the whole like thesis around edge computing is interesting, and I'm still doing more homework on it. Um, this whole concept of like them, um, this whole concept of them like using the working with NVIDIA on the GPUs to have it in their base stations, and then essentially like converting, to the best of my knowledge, converting cell towers to like mini data center nodes so that the new generation of phones, like the 6G, can run AI inference straight on the device versus going like back and forth to the data center. Um, that's really an interesting concept. Again, I haven't like fully built out the thesis. Uh, it was, I looked at it. I read a couple of posts on it. I looked at their last sort of earnings and their revenue from AI, and their growth rate was like 49% or something. And I'm forming the thesis. I bought a little portion, and then I'm going to sell covered calls on it because the premiums are also really good. I don't know if I'm going to buy a bigger amount. If the covered
I think you looked at the premiums first and like, okay, I got to find out more about this.
No, they're not that good. They're okay. Like they're good, but they're not like,
Yeah.
Here's the thing that I don't like, and I'll be very straightforward about that. Like the thing that would have me like sell this thing, other than getting my shares called away, or let me rephrase. The reason why I'd have it only as a trade as opposed to a long-term investment. Can you guess the market cap of Nokia?
No. Well,
Just guess.
what is it? 100 million?
100 million?
No,
Yeah,
sorry,
close.
not 100 million. 100. It is 100 million?
No, it's like 92 billion, bro.
Yeah, I meant billion. So I was like, wait a minute.
Dude, I thought this thing, like, granted, before this week, I hadn't even, the last time I heard of Nokia was like, whoa, is this the 2000s all over again? I would have thought this thing would have been trading for like, $2 billion bucks, max. When I saw that it was 92 billion, I was like, holy, like, do I really want to buy? So like, I'm kind of concerned that I'm buying at the top, but I also, like I said earlier in this podcast, like I think we can go much, much higher from here, and largely they will benefit. So yeah, we're gonna see what happens there. It's just mostly like a fun trade. It's gonna force me to do some reading, and I'm gonna do that tomorrow on the beach. Gonna read about Nokia.
Yeah. Well, so another one for you, that I've seen some posts on. There's been some people that have like followed this name and been invested in it for a long time. Blackberry is one of those that it's similar bucket as Nokia. It's up massively year to date, and of course they're one of the few software names, if you look at them, that's actually doing very well. They are software more so than hardware. The QNX software. I might have the letters wrong there, but it's in vehicles already. There's some impact there from AI and potentially from robotics as well. I don't think it's just pumping for a name, but it's always strange when you see a name you've not thought of in like 5 or 6 years, or you're like, wow, they're still around. But it's a very different looking company for both Nokia and Blackberry than what they were known for initially. and companies can sometimes do that. So, and they're Canadian, right? Blackberry.
Blackberry, yes, not Nokia.
Okay, yeah.
Nokia's like Swedish, right? I think so.
Do you just refuse to invest in Canadian companies? Come on, man.
No, I'm allergic to that shit, bro. If a company is founded in Canada, I'm not going to hold it against them. If they're still operating out of Canada, I will absolutely hold it against them, because I'm like, it's against your better judgment at this point, because you have all the resources in the world to like go reincorporate in the US or Ireland or Bermuda or wherever else, and you're still choosing actively, and I'm talking to you, Toby, you're still choosing actively to stay in Canada. Like, it's your fault, man. All the politics and all the taxation and all the scrutiny that you complain about on Twitter, just leave. You know, you don't have to do this. Why are you making life harder on yourself than it has to be? I told you this before, Roy. Life in Canada is like choosing to play on hard mode, you know? And if you're a company that's doing that, you're doing that for, thousands, if not tens of thousands of employees. Just, dude, make it easier for your shareholders, make it easier for end users, make it easier for your company. Just leave.
Maybe. You ready to get into Q&A?
I love how you can always just rile me up by mentioning Canada.
Oh, it was funny. Like I usually don't have the time to catch Tanner's midday streams, but today I did. And he was being rage baited, and I know how to rage bait you too if I need to. So just mention Canada a little bit.
Yeah, exactly. All right, we have 25 questions, and yeah, I sure would, Jer. I sure would. I mean, what's not to love, man? I saw somebody, who was it, a couple days ago? They were like, American, why would I want to be American? And I was just like, where do I start? Okay, more money, stronger dollar, more freedoms, more like states to go visit. You have basically any climate you could ever want. And it's just like, ugh. Anyways, let's go into Q&A. First question. Is Science and Exposure Trust BST BlackRock a good play for Anthropic and Databricks IPO exposure?
I don't know this one specifically. I know that there's a few ETFs for exposure. So I would just look in and see. Well, I would ask yourself two things. One is, are you really just there for those two names? If so, look at the name, look at the ETFs that give you the greatest exposure. If not, look at all the other names there. So, and that can make a definite difference. Like I know a lot of the focus is on like 3 or 4 names that are private, but there's a lot of quality names there. So don't overlook those.
Yeah, and there's also like way more ways to skin that cat if Anthropic and Databricks exposure is what you want. Like, you can get into so many different funds that own both those names. I think what is it? One of the ARK funds, ARK X, I want to say, or ARK Private Ventures. Yeah, just look at the funds that have exposure to those and just invest in one of those. Like, there's many out there. I'm up $500,000 on my Micron. Where's this monster headed? First of all, congratulations, sir. That is a big number. I love how you put it like in a decimal to make it sound less than what it actually is. I think Micron is headed over $1,000 personally. I think it's going to go to 1,200. But
yeah, there's a fair chance.
If I had $500,000 profits that I'm sitting on, I'd probably, write some pretty aggressive covered calls on those. But you do you.
Yeah, the wild card is probably used to what happens there. But yeah, if not for that, it's probably higher.
No, just the lighting is worse here. Like, if I get closer, I'll probably see. You can still see. But I have like super bright, like the fluorescent lights in my office, and this is mostly like warm lighting here. But I'll take less stress. I'll happily take that as an excuse. So thank you. When are you guys covering Nubank latest earnings? Never. Thank you.
I've just not had time to make that video, and it's not been. It always like I have a list of things that I want to get to, and there's things that I add to it, and it just keeps getting pushed out. I think probably what I'll do. I have some articles that I plan to be writing as well. Doing one on South America and financial exposure. So you're going to look at the dLocal, StoneCo, Nubank, and Mercado Libre. Maybe one or two other names too, but just kind of what's happening there, what the space what the space is doing. Nubank will be, it's the one that I know the best, so it'll get the most exposure there. Might do a video based on that too, but it's not top of mind right now, and the market's treating it that way, sadly.
Yeah. What about Poet? Is it Canadian? I don't think so. They just had an
they're a name that is associated with Silicon Photonics, but really what this company does is they promote themselves very well. They hype their stock, and then they sell, and that's what they're best at.
Maybe they are Canadian.
Like I'm not saying that they're a zero. I've never said that, but man, like they've done sketchy stuff at least since 2024. Be careful with that one.
Yeah. Can you have a session where you talk about stocks you did not pick, for example, Micron, SanDisk, and why? Well, in the specific case of those two stocks, is because we're freaking idiots.
I did buy Micron, but I lost money on it.
Just
So, yeah, SanDisk was one where I didn't understand. Like, I understood the Micron. I'd been talking about Micron since October, actually, and it's because of the CEO of Air Test Systems and his comments related to what's happening in that space. And I just, in hindsight, I should have listened. And when I began to take things seriously, I was like, man, it's off and to the right. There was some pushback on the actual demand and cyclicality. And I was like, let me take some more time to understand it. And then the stock doubled. I'm like, well, that's not fun. SanDisk, I didn't understand the need there on that side of what was happening with the AI space.
Yeah. Any thoughts on Uber COO? We talked about this. Check 46-minute mark. Still bullish on BMNR. If so, what's the price target by end of year? Yeah, I think we can hit $45 by end of year. I can definitely see that happening. More of a financial planning question here. Do you guys have emergency funds set aside that you don't invest? If so, is it 6 months worth of living expenses?
It's less than that for me. I do think 6 months is a good target. But yeah, I have more than a month worth on hand, and I can always sell some stuff if I need to raise in an emergency.
Yeah.
Thankfully, I've not been there and had to do that before, but yeah.
Yeah, generally I'll have like, of living expenses. Yeah, maybe like 3 months, 4 months, sort of. I don't really think actively about it, but yeah.
Yeah, like really, like 2 or 3 months, like for me, is pretty comfortable. And it's something really bad, which life sometimes does throw that at you, would have to happen for me to need more, I think. So.
Yeah, exactly. You think Dave ran, dude, I just bought Nokia today. Okay. All right. You're talking about an emergency fund. Get the hell out of here.
I think Dave would like Nokia. He'd be like, yeah, Nokia, Blackberry, conservative
Like,
companies.
I still use one. It's like, yeah, cool. All right. Andrew asks, would you guys rather buy now or Celsius at these levels? And number 2, have you seen this max yield covered call ETF? Chippy gives 33% dividend, pays weekly, has to be a scam.
I don't know anything about that one, but yeah, be careful. 33% dividend. I'm assuming that's over the course of the year. It's that. Otherwise, it is a scam for sure. But yeah, I'm guessing that they probably run some sort of option strategy, and then they like similar to Yield Max, and look at how Yield Max assets perform versus the underlying, and usually you're just better off owning the underlying if you're bullish. On ServiceNow or Celsius is a commodity. I don't think ServiceNow is. Am I super excited about ServiceNow? Not really. but it is one of a very few SaaS names that I wouldn't mind buying at some point. So if I was forced to pick between these two, it would be ServiceNow.
Yeah. I don't know nearly enough about ServiceNow to make that distinction. I'm not against honestly buying Celsius again. Like I don't, it's not top of the list. I mean, it's not even top 5 on the list. But if I had a gun to my head and I had to buy Celsius, I wouldn't be like, shoot me, please. I'd probably buy it. So take that as you will, I guess.
Yeah, and I'm assuming, that this is a long-term investment, not a trade. If it's a trade, it absolutely Celsius, like no question.
Yeah. What about space companies or ETFs?
We talked about that. Go back to the 15-minute mark.
Yep. All right, now you're frozen for me, Roy. I don't know if this is...
It's you, so.
Okay.
Can you hear me?
Yeah, you're good. I can hear you, but you're frozen. Thoughts on Coreweave? Yep, this is the 30-minute mark. Phil, what do you guys think of the 111K Ethereum tokens bought by BMNR last week? Tevis, I don't think Tom Lee is misleading. Maybe Ethereum at this price is a better buy than other opportunities he spoke of 2 weeks ago. It's very possible. It's just confusing. Like two things can be true at once. The man says we're going to slow down, and then he actually speeds up inadvertently. Now, you had a pullback, sure, but like it was what, a 10% pullback, 15% pullback. So it's just confusing, bro.
And pulling up MNAV, it looks like it's just close to even. So they were slightly over last week. Actually, they got up to just slightly over. So not they're going to get to that 5%. They want to get to there in a hurry. And I do think that Tom is. I don't think that he's spouting lies. Like I think he believes what he's saying, that the mini crypto winter, it's over. Ethereum's about to rally. And if you believe that, you're buying all that you can as fast as you can. So I just think he's ahead of things. Not like Kathy Wood, who 5 years ago said that Bitcoin was going to 500,000 and then said that again today, which oddly enough, it's 5 years later. We're not there. Will it get to 500,000? Yes, but that's going to take a while. Ethereum will take some time.
Yeah. Doesn't a 30 PE for NVIDIA make it around 13 and 14% of the S&P? This sounds like a Claude question. Why are you asking me this shit, Sway?
Yeah, no, it's not that. It is a large percentage. You can Google that very quickly or ask Claude. It's much smaller than that.
Are we doing Fiesta on Friday or Saturday? It's a good question.
I'd prefer Friday. I guess, you're traveling, so it kind of depends on you.
I think I should be home with good internet by Friday. Let me get back to you. Let's have Friday as the base case, and then we'll let you guys know.
You're such an investing nerd. Base case.
Base case.
Net new funds. I mean, this guy's an investor.
Jeez, dude, I say that at work now too. It's just like, all right, what's our best case timeline, and what's our bull case timeline, and people are like, what? It's bad. Anyways, let's continue. Are we looking to sell everything in June and go away?
No.
Good question.
I think this was
the Micron gains.
Yeah, I saw Jai, talking about gains in the course, that I think based on his comments, he's set, like he's hit his goals. And at that point, like it's not wrong to take money off the table. You de-risk. Like if you've made it, you're set for life. I don't know if he is or not, or like whatever goal it is. Why not de-risk? Instead of like, well, but I can do even better. Like, no, dude. Like when you're set, you're set. So makes sense to be a little more conservative. For me, I've not hit that, and I think that the goal that I set, years and years ago for retirement because of inflation, it's realistically I have to go higher than that. So I think that most retail investors, instead of trying to guess the market, do better just staying in it long term in names that you love. With the occasional, like if you have a sizable enough portfolio and you see some risk, you take some gains, do some hedging. But yeah, I think it's a mistake to get all out.
Yeah, I mean, I agree with that. Hedge, not go all out. Will Canadians have access to SpaceX IPO? I mean, look, if you have access to the U.S. markets, you're going to have access to the SpaceX IPO. So that's like, I don't know if you're going to have a Canadian fund that does it or if you're an accredited investor, but I think, yeah, go ahead.
Yeah, he's saying IPO, so he doesn't need to be an accredited investor for that, unless things are very different up in Canada. But yeah, like we don't know yet. It's a little bit too early on in the process to know what institutions will offer it. But the nice thing, Charles, is you know that the institutions that do have IPO access, and there's probably going to be a lot, are going to be shouting it from the rooftops. So you don't have to really look and search for that. They will tell you.
Okay. Yeah, exactly. They want your money. Why would you want to invest in a company reliant on government money? I think this is with regards to SpaceX, but since you're the Palantir investor, go for it.
Yeah, I was going to say reliance probably the wrong way to look at it. Realistically, like I'm a lowercase l libertarian, and I would love for Doge to have been like a thing that not only trimmed, what they did, but like just gutted a lot of the pork in the government. There's a ton. There's a ridiculous amount. That's not the reality. The reality is everybody loves to spend. Republicans love to spend. Democrats love to outspend Republicans. Nobody wants to cut, or very, very few. And a lot of those names, frankly, are getting voted out at midterms. So they're probably not going to be making it back even if they run as independents. So the sad and not so great reality is government spend is going to increase. And in names like SpaceX, like look at Jared Isaacman, he's the head of NASA. They're probably going to get larger and more contracts, not smaller. Again, a lot of it too is the internet that they provide. And then names like Anthropic, names like Palantir, like you've seen them absolutely explode, except in cases where they're like, hey, we don't want to be used in that way. So there's a lot of stability with government revenue, and I think that's the right way to look at it. Usually you don't have the explosive growth, but right now you get both. So I don't think it's necessarily a bad thing. Unless you want to zoom out and be like, oh man, government spending's maybe not healthy. We got to grow our way out of that.
SpaceX makes about 20% from government contracts. I also don't think they're going to lose those government contracts. I mean, maybe you could argue that like, oh, Rocket Lab is going to encroach, but like they have, I think, fundamentally different areas that they play in right now. So
yeah,
it'll be
like the pushback that I've seen, and fair enough, is that Democrats loathe Elon. But even so, like some of the things that SpaceX does, they're the only ones right now that can do it at scale. Yeah, Blue Origin exists. Yeah, Rocket Lab has some really good offerings, but
yeah,
they're an American company. They're going to get a lot of business from the government, especially under Isaac, especially.
Rodrigo, I read that institutions cannot sell within the first 6 months of buying into an IPO. Is that true? 6 months sounds like a lot.
That I think you might be thinking of the IPO lockup for insiders. That's typical, 180 days. Sometimes in the prospectus it's different, but that's the baseline.
Yeah, it's either 180 or 90 in some cases. Where they have a lockup period.
Yeah, there is a lockup period for institutions, but I don't think it always is in lockstep with that. So yeah, that's a good question for AI too.
Can we talk about real things? Did you see Ferrari's all-electric vehicle? What a trash. I don't buy a Ferrari, so the world can't hear me. Yeah, the Ferrari Luce.
So
designed by Johnny Ive.
One thing that I will say, I was actually thinking about this today as I was driving around my Tesla Model 3, is they've gone away with from the X and the S. And so there's all of a sudden, not that they're selling a ton of those vehicles, but for those high-end consumers that want the high-end premium product, I mean, the Y is great, but it's not a Model S. So there's a sudden gap in the high end on the EV space, and I'm really curious what fills that. So it's interesting timing. So I was thinking about that earlier today, and then seeing Ferrari's offering. I don't know about that. I'm very skeptical, but like, does this mean that Lucid is going to perform very well? Because they do cater to the higher end market. There's others as well. That's something, or are we just presuming that the high end doesn't exist? I think that would be a bad assumption. But I think that there will be multiple different parties trying to cater to that high end in the EV space, and something is probably going to click. And no,
Yeah.
probably it's not Rivian. Like that's not the high end that people are thinking.
Yeah, and look, I think Ferrari was down 7-8%. And I don't even think it was that it was an EV. Like, I get it. Every company is going to start doing EVs, BMW and Mercedes and all of these companies. I just think that it just looks like shit. Like it looks like an iPad with 4 wheels. Like why would they let Johnny Ive get near this thing? Like, design the interior, not the exterior.
What company benefits if we do see an EV race heat up? Air Test Systems, Silicon Carbide, man. That was 90% of the revenue like 2 years ago was just from that. It was the reason why I was pumping in 2023. So
that, unfortunately, is a stock that I will not own 30 to 60 days from now. Unfortunately, I'll have one share for the Christmas gift, but it's not looking good, man. It's not looking good. Yeah, I have $130 calls, so say goodbye to Air.
You should have 5-ish shares because of the $100 amount. So you're welcome.
5-ish.
I gave you $100 worth of Air. So.
I know, that's one share, bro.
Well, I gave you $100 worth, which is worth a lot more than $100 right now. So
sure. I'll keep 5 shares for you.
All right, good. Yeah.
But the rest are gone. Let's see. Did you answer my Rocket Lab question? Snappy, but no, we haven't gotten around to it yet. Hold on, let me find it. Here we go. Blake wants to skip the queue because he's impatient. Do you think Rocket Lab may hit 200 per share when SpaceX IPOs? Nah.
I think if it does, it'll probably be before, and then it'll fall from there.
I think 200
is some crazy news. Like Golden Dome might be the wild card, but
yeah. 200 is going to be a big psychological selling point. Yeah. I don't know, man. I just maybe, but SpaceX is IPOing in 2 weeks. So you think Rocket Lab's going to go from 140 to 200 in 2 weeks? Because I still think that after SpaceX IPOs in the next couple of days, we're going to start to see the start of a sell-off in SpaceX and maybe in space in general. So if you believe that, well, what I'm reading between the lines, is that do I think Rocket Lab is going to go from 140 to 200 in 2 weeks? It's possible. I wouldn't put my money on it. But then again, I like being poor, so that's why I haven't put my money in Rocket Lab to date. Thank you, Blake. Michael, will AI scale the adoption of crypto? Yes. Ethereum will benefit because that's the payment layer on the blockchain that AI agents are going to pay with, because traditional banks have KYC. They have all these hoops you got to jump through for opening accounts. Agents are not humans. Agents can very easily open stablecoin wallets and transact on crypto, and they're going to do that on Ethereum.
Yeah, and there will be a lot of microtransactions and those sort of things, and crypto just works for that. So.
Yeah. Why aren't more of a MITS audience here? Most of them are traders. I mean, some of them are here. I think Technical Tuesday just ended, but yeah, look, this is me that should be asking you guys this. All right, do you love this show? Go out and spread the good word that is Bootleg Weekly. All right, isn't that how it goes, Roy?
Yeah, I guess so.
Something like that.
I think part of it too is like Amit's audience, probably, if we're talking about 6 to 8 months ago when we were doing Tech Bros Weekly, they're like, oh yeah, I know who Roy is, and they'll jump in on this or on Tanner, and I've just not interacted much on video with Amit recently, and so that's a factor.
Yeah, I don't think I've been on Amit's channel like in years. um, but he was like the most tagged person in that Nokia thread. So we could potentially reach out and see if he wants to do a stock tank with us on Nokia. That could be fun. But I don't know if it's like a trade for him, because I think he was saying it's a trade for him as opposed to a long-term buy and hold. So maybe he might not be down for that. But again, you guys go and promote Bootleg. If we grow, we do more of this. If we do more of this, then everybody benefits. All right. Next, can Noto be pumping the stock? He says 2 million is a lot for him, but he's worth 254 billion. Dude, 2 million, like he's just down to earth. He didn't grow up with a silver spoon. Like 2 million is a lot for everybody, regardless of how much you're worth.
And if that's his net worth, a lot of it is in SoFi.
Yeah, the majority, it's like over 80% is in SoFi. So Jack says, here's here from Amit. And Jared says, this shows, dude, I am so fucking low energy today. I don't know why. I just am. I just woke up this way.
The time zone might be a factor, so.
Not at all. I don't know. I'm having a freaking low brain chemistry day for some reason. It doesn't matter. Thomas, why not just leave Canada, Tennis? Tennis wants to leave Canada. Canada doesn't want Tennis to leave. So I got to figure out a way. Thank you, Thomas. Sincerely, Tennis. Thoughts on BM&R inclusion into Russell 1000 index? Roy, did you hear about this?
Yeah. I mean, like usually in the smaller indices, it has more of an impact than actually, as long as you've not skipped multiple index funds that you normally would go into, going right into the S&P 500. So yeah, it's a great thing.
Noto backwards is O ton O cash.
Yes.
Killed it. Yeah, I agree. That's probably why he bought $2 million worth in like a month. YouTube should have a repost button like TikTok. Speaking of, I reopened my TikTok for all you 21-year-olds in the chat. And I even opened an Instagram for you guys where I'm posting stories of me at the beach. So if you want to stay tuned, then go follow me there. It's literally pinned in the chat. Fiesta Fridays with rugby and tennis.
Yes.
Yes. Buy the 5 million gold card in GTFO. Kelly, you buy the 5 million gold card in GTFO, all right? Like, don't give me that, first of all. Second of all, I'm currently in Europe, and I think I will continue to remain in Europe on a permanent basis, or at least plan to do so in the next several years. So if I can't get the US innovation, then I might as well get the European regulation. Tom Lee expects a super cycle in Ethereum and crypto, now holding 4.5% of outstanding supply, and still determined a year-end price target of 12,000. Do we believe him? Will his prediction ever come true?
I mean, Ethereum's probably going to be higher. I don't know that we hit an all-time high this year. I think that cycle really starts heating up in the fourth quarter, probably in September, maybe October. And it can move really fast. People kind of forget that during a crypto winter. But I would bet a lot of money against 12,000 this year. A lot. Now, will it ever? Ever is a long time. So yes, it absolutely will. And even this cycle, we may see it. So there's a fair chance.
Yeah. Okay. I don't know. I think either Roy left or I'm just freezing again. Just going to continue talking. Is this a travel vlog? I mean, I could make Instagram a travel vlog if you guys really want to see that, because that could be fun. But you guys let me know. I need more than 42 followers to make it a travel vlog. So we'll go from there. Why don't you own Bloom? Because I like being poor. That's probably why.
Yeah, VG was my energy play, and I like a lot of concentration. So in hindsight, yeah, Bloom Energy would have been a good one. But yeah.
Yeah, especially after their partnership with NBIS, I think that's really interesting as well. Like it came more in the forefront of my radar. I know Chris Camillo made like a ton of money on Bloom, and congratulations to him and the entire crew. Like we were covering Bloom when Roy back in beginning of March when it was like $70, $80, and yeah, we just didn't pull the trigger, and snooze you lose. Next question. So after Noto's remarks on Leaps, are you guys looking to buy calls? Yes, I am looking to buy calls. I already own Leaps on SoFi, but I could always buy more.
Yeah, so like if we stay where we're at or we go down, like stay where we're at later as we get to late summer, yes, probably. Well, probably what I'll do is I'll just roll out the 10s that I have that expire in January. And if we go down lower, like if we're at $12 a share and the world is not ending, macro is not, like Hormuz perpetually closed, inflation spiking about 6%, no. But barring that, if we get to 12 on SoFi, yes, I'll buy a lot of calls in.
Yeah.
Wasn't it 60 at Robinhood?
Wasn't it last week that I told you I was like, I kind of just want to sell SoFi and just use the proceeds and to buy Leaps?
Mm-hmm.
Still on the table. Jer, AMD is 38% of my portfolio. Trim? Question mark.
If you can sleep at night, then why not hold it if you're a long-term investor, as long as you think the company's executing well. If your life would benefit materially from you taking profits or it gives you peace of mind, then maybe do that. So, and if your portfolio is $1,000, I mean, it's $1,000. But assuming it's, a 6-figure, 7-figure portfolio, if you're like, man, every single move, you're just glued to the screen and it's causing you that, that's probably a good indicator to do something a little different.
This is not financial advice, Jer. Be better. Do you think NBIS can reach 300 by the end of August? I think it's possible. Me too. I think it's definitely possible.
It's possible. It's ahead of itself. It would still be ahead of itself there. But yeah, I don't even think NBIS at 200 is like euphoric. 300 plus like 350, that would be euphoria. Especially for this man.
It would be euphoria for me, that's for sure. So let's hope it happens. Sanjay, do you think CleanSpark's recent pump is the start of its AI DC journey ahead of its first contract? Are you looking at it? I think CleanSpark's recent pump is as a result of that Leopold kid buying CleanSpark. Because people are like, oh, CleanSpark is going to be the next Bitcoin miner turned AI supplier, and it's going to get bid up on the re-rating. But at the same time, if that Leopold had bought, a bag of shit, like the market would re-rate that too, because he's just the hottest trade on the market right now. So I don't know what CleanSpark's going to do. I owned it for a little while. I sold it because the story was entirely a Bitcoin miner story. But you got to understand, guys, like it's largely a matter of execution. You can have this like sneaker company and a toilet company both say that they're AI companies now, but like nothing really matters if they can't execute against that. You guys understand that, right? And so these companies might get a pump in the short term, but they will sure as heck give up all of those gains if the execution doesn't shine through. It's the same thing with CleanSpark. Go ahead, Roy.
Yeah, I think Cypher is getting a pump for a similar reason too. Like some of it's a catch-up trade on what's already happened with names like IREN. So just be careful of that. Like if there's I haven't followed CleanSpark closely since they bought the private jet. Occasionally I keep tabs on it, but
I forgot about that.
I think it's the same leadership team. And like Teva said, when it comes down to execution, can you trust the leadership? I don't know because I've not followed them since 2023. Maybe early 2024, but yeah. There's a lot of companies making moves like that, so.
Okay, next question. Palantir is so dead recently. At what level does it get too hard to ignore? You can answer that while I bookmark some questions.
I think $100 a share, a lot of people would be very interested, including myself. I've added very gradually, not significant amounts, but just the world's slowest GCA is what I call it. The reality is it's still expensive. Now, they're growing ridiculously. They have a ridiculous moat, and they need time to grow into that valuation. They're not going to look cheap even at 100, but I think a lot of people will find it very compelling, especially given the differentiation of what they offer versus any other company on the planet. So, but yeah, for now, I don't think it's a bad price, but like if you're looking to nibble or speculate, 130s is always a pretty good range of Palantir for long term. Again, not financial advice.
Tennis, are the Canadian Mounties after you? Hide in Switzerland. They ride horses, bro. I've crossed the waters. So, and no, they have no reason to be after me. I've paid my taxes, as painstaking as that was. Hiding in Switzerland would have probably been a way better alternative. So we'll consider that for next year. Thank you, Steve, in the mountains. Tanner invests. Thoughts on Kohu, Roy? Working on the same vein as Air.
Yeah, they kind of are like because they're in the automated testing equipment niche and they've been around a long time. I think they're larger than Air. Well, I can look it up later. What I don't know about them is what their niche is. Now, the good thing is like you can just look at Teradyne and be like, oh man, everything in the automated testing equipment space, not everything, but most things are getting pumped. But what I like about Air specifically is not only the substrates that they're involved in, but also that they're moving all the way upstream to wafer level testing, which I think in some instances in applications, like it's the inevitable way that these companies that have to go. Like they will be given no choice. And I want to be in a name that it's not just say, yeah, it's kind of nice and it'll work with these but it's like this is the way that the companies must go long term, and they'll have no alternative, and they're the only ones that offer it. So Kohu, I just don't know enough about as far as like what their niche is in the space.
Anyone know Manuel's new position? I didn't know he took a new position. Do you know what it is?
He talked about I think it was a micro cap or small cap. I don't know that he ended up posting that publicly. So, and I don't personally know it.
I got a message, Manuel.
Yeah.
A micro cap. I feel bad, man, because like we're friends, but like if he does research and he hides it under a paywall, I don't want to just like DM him and be like, "Yo, what's the stock?" You know, like I'll probably just subscribe to his thing and then just read it like everybody else.
Do me a solid and let me know.
Yeah, we can just like crowdsource. I'll get an account and then everybody can pay me 50 cents to subsidize the account. We can talk about it on the channel. I just totally screw our buddy out of good hard work. Blake, do you own Reddit, or do you agree that it's a woke dumpster fire? Don't understand why Mitt and Tanner own it, but I guess advertising is lucrative. Yeah, look, I think from my experience using I don't use Reddit at all, because from my experience using it, every single thing that I've ever tried to post on Reddit got deleted within hours from moderators because it didn't follow one of their stupid fucking rules. It's like, oh, well, this post doesn't sufficiently talk about this. Oh, well, you need to have an account that's sufficient karma to post. Like, well, how do I freaking get karma if I don't post anything? Oh, well, but putting that aside, the crappy user experience, I think the play for Reddit is not necessarily the advertising revenue, but more around the data for AI, because you can have an AI company fully just acquire Reddit for all of that user generated content, the user generated data, because all of that data is so much more finely tuned than Google search results, which is like blog posts and whatnot. So I don't use Reddit. I'll tell you where I use it. I use it when I'm searching for like a product or something. I'll go, best electric razor, and then I'll add Reddit behind it, or best vacuum, Reddit. And the comments are way better than me getting pushed some type of Google SEO advertising that somebody's paying for, because it's like real reviews. That is a gold mine for AI. This is also why I think X has an advantage on AI, because it's user generated content, right? Meta, same thing. So anyways, that's my thoughts on Reddit.
Yeah, throw this up real quick too. Like that was one of two factors. This is the other one. This is revenue growth. When you have a company growing at 70% and it looks pretty durable, there is, some seasonality, of course, that happens in that last quarter every single year. It's hard to like just look at this and be like, it's a passing fad. Yeah, because again, where real human eyeballs are, and yes, I agree with you on the politics stuff of it. Like, I've not posted there in a long time for that reason. I will lurk occasionally with some subreddits, but yeah, there's value in what they do. So yeah, I wouldn't hate on that at all. They'll probably be okay. It might take more time than they're expecting though.
Yeah, hold on. Next question. Did I just go on a mini rant about Reddit? Maybe. Do they deserve it? Yes. What are we discussing? How much we hate Reddit? Get on board. Real estate whiz. What's the hate on Coreweave? Are they just not 6 to 12 months out from having to dilute or take on debt like Coreweave anyway?
I think he's referring to the competitors. Yeah, we had a discussion on Coreweave at the 30-minute mark. So go back to that. As far as like NBIS specifically, yeah, NBIS will keep having to dilute. We talked about that as well. I don't think that they're going to go the debt avenue unless they have to. I think that they find that dilution more appealing. But we talked about the merits in both. And that is one of the articles and eventually a video too that I plan to do is looking at the different strategies with some of the larger data center names, the inference names.
Yeah, so maybe just rewind to the 30-minute mark. I don't understand the question. Okay. Do you like Nokia?
Or
Yes.
North Korea.
Oh.
He might be saying North Korea.
Well, depending on which one you're saying, the answer is a tentative yes.
Would you rather live in North Korea or Canada, Tennis?
Trick question. They're the same thing. Haha.
It's the Office meme. Look at these two pictures and tell me the difference. They're the same thing. No, not really.
Yeah. When are we dumpster diving into SaaS companies? Great question, Jay. Great question.
Yeah, you can go ahead and start.
I think soon. I think very soon. It's going to be time. There's going to be rotation. It's just a matter of like, is the top going to be the SpaceX IPO? Is that going to be a pullback and the AI trade is going to continue? I don't know. I would say how I'm approaching it is I'm getting more interested in building a short list of SaaS companies that I want to take a closer look at. And I haven't, nor do I think I will, pull the trigger on any, within the next couple of months. But I think that pump in ServiceNow was really emblematic to me. It was short lived, but it happened to coincide with a day where semis just got absolutely crushed. And I was like, uh-oh, the rotation has started. Because that's what it's funds at the end of the day that are rotating their capital. And I think you're going to see more of that. And the moment I start to see some of these like technical downtrends being broken, or the moment I start to see the AI trade topping out or going flat for several months, and the moment I start to see more of these articles around like more companies are, using less AI because it's so expensive and this and that, or productivity gains not as advertised, that's when I'm like, all right, time to go dumpster diving.
Yeah, I think the answer, and again, not financial advice, for Wix, it's now, like right now, because of base 44.
What's it at right now?
55, something like that. It's been, beaten up. The underlying business is not deteriorating as fast as a lot of people expected, and base 44 is just a monster. But the market hates it because it's software. But I'm not saying it's going to instantly rebound or double or triple like in the next year. There are other names that are interesting there. I've talked Palantir quite a bit. ServiceNow is one that I certainly don't hate in this space. There's names like Intuit where it's like it's ServiceNow where it's like, okay, these businesses are clearly not going to zero, but where do you actually step in? I think that what we might see, Tevis, this year. Well, let me just pull up Intuit real quick. I think the CEO, he's been there forever. And oftentimes what happens with names where there's a massive pivot in both what's happening with the macro and the way that your business was headed, and you see, like here's just the year to date on Intuit, is down 51% year over year. And you see a little bit of a slowdown in your business. Let's pull up the financials right quick. And right here, total revenue. Now EPS tells a different story. We can look at price earnings. We're not going to, like this to Q&A, we're not going to make it really fast, but it doesn't look bad, but it doesn't tell the full story. There is some deterioration, or as far as their moat. Here we go, the quarter of a quarter right here. The 10% is kind of a scary number. Now, they put up a ton of revenue because it's April, TurboTax, but that's one of those products that you have to kind of question and say, okay, how vulnerable is this actually? The CEO there and the people that are working internally probably know better. But what I think is going to happen with Intuit, maybe Adobe, probably not ServiceNow, probably not CRM with Mark Benioff, but a lot of the other names too, is you're going to see boards where the board is very unhappy. They're not happy with the direction. Maybe there's not a clear direction. And all of a sudden, you're going to see a lot of churn in the C-suite. When that happens, I think that what to keep an eye on is basically like who they're bringing on and why. If they do like a pivot like PayPal did most recently, I know they're not in SaaS, but like bringing in a guy whose best ideas are let's do a lot of cuts. That's it. Run. Don't wait around. Run.
I don't know, man. That's a
trading
playbook. That playbook has been around for a long, long time.
Yeah, but in this environment, this is different, Thomas, because you're in the age of AI. Your mode is under attack. If your best idea, I'm not saying there will be cuts. There needs to be, and a lot of these firms, including Intuit, have announced those. But if your best idea is cuts and buybacks in the face of AI in a deteriorating mode, that is problematic. And unless you're just trading and looking for a bump, I would run and scream from that. Now, if there's a guy that's brought in and he seems like he's not just an operator, but somebody that can bring and reinvigorate innovation or help compound basically that moat and make it more durable over time, or just sets a clear direction for the company that's maybe the market didn't understand previously, and it looks like hey, this moat is actually strengthening them, which frankly some of these SaaS names have stronger moats because of AI, not weaker, that's a play that I'd be very interested in. But I'm kind of curious over the summer because it'll be for some of these names about a year of just being slaughtered. How many actually end up seeing CEOs? You won't see them all being fired, but they'll be retiring and moving on to other projects, and they're being let go or they're being asked to leave.
Yeah, I have thoughts, but I largely agree. Jay has a follow-up here, says, look, the only downside of getting into SaaS companies is that they could be dead money for a while. Do we need more SoFis in our portfolio? Yeah, look, man, like, I think, let's just say we've done the homework to find a SaaS that's worth its salt and it's unfairly sold off and they're actually going to be fine. Maybe they're adopting AI. Maybe they're seeing efficiency gains. Maybe this is a SaaS like SoFi, let's just say, that we want to invest in anyways. Great. We've achieved that point. The question is really, Jay, what would you rather sit on? Would you sit on dead money for a couple of months, or would you like keep riding the AI wave full tilt, knowing that it's getting a little bit toppy in the short term? Because like for me, I'm still going to have a massive exposure into NBIS, but should I book maybe 30% of those profits, maybe 40% of those profits, and rotate that into some dead money stuff that I know for a fact is undervalued and will rise? Possibly, right? As opposed to just being like YOLO all the way, not gonna, paper hand out and have this thing go to 300 and then go back to 200 and then go, back to 150 and then go back to 250 and just oscillate in between. I don't know that that's going to happen. I'm just saying that like we're on a winning hand right now. At what point do we take some chips off the table and rotate them into something that is a longer term play? For some people, it might be never. For some people, it might be like, screw that. I'm going to take my 2x or my 3x that I got and rotate the entire thing. And for most people, they're going to fall somewhere in between where it's like, hey, I'm going to take some profits off of here. Thank you very much. And I'm going to allocate them over here and I'll keep waiting. It's a long game.
Yeah, it's interesting though that he put SoFi in there, and some people might be like, well, those are unrelated questions. Well, at least what's happening with the loan platform business, we're seeing probably, although I don't think that this has been directly answered, more demand in that space from private credit specifically as they shift away from SaaS. And the longer that SaaS has this overhang, which used to be durable, predictive, and I think was over 25% of where private credit was positioned. Those are tailwinds for the loan platform business. They're also tailwinds for Figure specifically with their democratized prime. I don't know. It's not necessarily two questions. So I thought that was cool.
Yeah, I think this summarizes it well. Portfolio management is more important than any individual stock. Thank you, Greg Volo. Appreciate that. Let's see. All right, there's a bunch of other questions that we have bookmarked. We should wrap this up at some point or another. I will stop bookmarking questions for you degenerates because we're over 2 hours now. So great question, Matthew Johnson. We're not going to answer it. Ask him Friday. All right. How about that? That's revenge for you asking 10 questions every stream. You super fan, you. Why am I hating on Italians? Bro, they're the most pretentious people you'll ever meet in your life. Try getting a meal in Italy. Like, just try getting a meal. If it's between the hours of 3 p.m. and 9 p.m., everything's closed. Everything's closed. They open between noon and they close at 3 p.m. and they open again at like 8 p.m. to 10 p.m. for like dinner. Try getting a cappuccino after 6 p.m. The waiter will laugh in your face. Like, these people are allergic to making money. They are the most anti-industrious, laziest, fucking self-entitled jerks you'll ever meet. Beautiful people to look at. Great patriotic to one another, but if they sniff that you're a tourist, you're dead to them. Same with French people, by the way. So yeah, the Italian people are. Just go to Italy. You'll see what I mean. All right. Thomas says, I have the potential to switch to a job with a 50% raise, but I have to move about 2 hours from my family and about an hour from friends. Thoughts? Have you ever done something like this, guys?
You're moving. You're not just commuting. Thomas, I would be concerned with that, especially if you have kids. Now, if you're talking about like your mom and dad and your brother and sister, yeah, do that. But like if you have a wife and young kids, man, I have long talks with your wife. If your kids are older, involve them in those conversations too, dude. The money, like I don't know, like I don't know your situation or family, but be careful. That's not a light decision to make.
I would ask a couple of questions. Can your family move with you? 50% raise is big enough for it to be a family discussion to move with you. Can you commute? Because if you can commute, then it becomes kind of like a math problem, like add 4 hours to your hourly wage and then divide that new amount by your old amount minus 4 hours. Like, what does it come out to? But yeah, I think like permanently moving away and being probably only seeing them on weekends and such, that's tough. It all depends on what you're prioritizing right now in your life, but just know that you're going to have a hit on the other side that you have to account for.
Seen that work something similar successfully, but it's like 5% of the time. Usually it does not. It's you got a young family, dude. But yeah, if it's your mom and dad and your brothers and sisters, go. Forget those guys.
I think I opened a can of worms with my commentary on the Italian people. Didn't know
I said
you.
nothing.
Yeah.
I gotta say, Arnie is Italian, and I love that man. So,
yeah, I mean, you guys are not sensitive about finding employment, but all of a sudden you're all sensitive about what I say, and complaining about it in the chat. Funny how that works, guys. Roy, any thoughts of selling out of VG due to an agreement being negotiated?
So it shouldn't go below 11. If an agreement is negotiated, everything's great and hunky-dory. It was already trading at 9 before what happened with Iran, and nobody's really expecting or pricing it at that point. That's not the reason for the run. So if I'm not trying to play it too fine. Like I said, I even bought call options as a hedge in case things are not negotiated and kind of fall apart over the next month or so. Then those will print and the rest of my portfolio do terrible. Like, I prefer that not happen. I'd love for those call options to go to 0, but
yeah.
I think like the other thing I'll say is like if you're in VG because of long term and you see where it's going long term, this is not a bad price to buy VG and hold it.
Yeah, my calls on VG are going to expire most likely worthless on Friday, and probably going to write more. So it's been a nice little hedge for me. Mary says, I'm Italian. I'm not sensitive to your comments. I met you and I know you're a nice person. Mary's just the sweetest. Yeah, not all only Italians living in Italy. All right. Can you take a look at Compass Pathways? Is this the psychedelics company?
Let me see. Mental health. Yeah. Psilocybin, the mushroom, Comp 360. I don't know anything about it. Sorry.
Like a psychedelic therapeutics company.
Yeah. Definitely not my thing. So it's on a little bit of a run.
Turtleback, thank you so much for the $10. here a lot, but glad to be here when I can. You guys are great. Really appreciate that. You're great, dude. Hope you're not Italian. Roy Tevis, what's a good price to take a position in VG?
I think
Planning on loading
long-term here. Yeah.
You're saying here, Roy?
Yeah, I wouldn't go all in here because again, Hormuz reopens, it could get silly. Like if you see it below $10 a share, man, that's a steal. I don't know that we get there. I kind of doubt it, but the market does tend to overreact. I think it's attractive here for the long term.
Yeah, I mean, like, given the Strait of Hormuz situation, you could just go a couple weeks by just selling puts. And if they get hit, well, you get a better cost basis. If they don't get hit, then you just get paid to wait for a little while. So until we know how this thing will resolve, I think that's a potential avenue that you could follow, not financial advice, of course. Did Mary meet you when you weren't hangry? Yeah, sorry for snapping at you, Matt. I feel like I snap at Matthew Johnson like every other stream, and I'm gonna meet him someday in person. He's gonna be like the sweetest human. Dude, I just say shit. Like I've been stream of consciousness for the last 2 hours and 15 minutes. Like I can't even remember half the stuff I say on these streams. You guys know this. I just say stuff. And that's what makes this show fun. It's spontaneous. Thoughts on Zeta?
Good company, good opportunity, bad sector, which is the main issue with it. Yeah.
It's catching a bit. It's back up to $20, Roy.
Yeah. It should be higher. Like if it wasn't associated with software stuff, it'd be probably 30, 35.
Yeah, 30, 35. That's like it's like a double.
Yeah.
It's like 50%.
But
higher.
I think the software overhang SaaS stuff, it can last a while. So
yes, I agree. All right, next question. We only have a couple left here.
Two SaaS names.
Speaking of SaaS, you guys have Vive. Is it Viva?
Viva Systems. I don't know enough about what they do. I know that they're in the software space. I looked them up real quick in between questions because I was like, the underlying fundamentals. I'm not seeing anything there that looks particularly compelling. Now, the hard thing is, I will say for a lot of the SaaS names is there was traditionally like the tech, and most people had, when they said tech premium, they thought of SaaS specifically. For a lot of the names that have sold off, like a Palantir, still a great company, but it's not cheap even now. And I think that Viva falls into that bucket. But I don't know like the underlying company, like what they specifically do.
Yeah. All right. What are your thoughts on UiPath going into earnings? No real thoughts. Don't follow it.
I've never really, like I took a deep look at them in 2023. I've not kept up with them, but I looked and I'm like, I don't see the moat. And the market apparently doesn't see it either. Now, some of their earnings fundamentals have improved, but again, they're in the software space. So I have no specific thoughts on earnings, but long-term in the company, that's not one that I particularly want to.
Yeah. Brian says, I just hit the FOMO buy button on 2 companies I know nothing about. Does that mean the top is in? Kind of, dude. Sorry to break it to you. In such a harsh way.
The wrong form of invest and investigate. You do some investigating first, like a little bit, and then you invest, and then you investigate more. But honestly, Brian, like if this causes you to look deeply into those companies and you like what you're seeing, awesome. If you're like, hey, I don't care about that, I just care about the stock, it's going to the moon, dangerous.
Yeah. Please be careful out there. Know what you own. Be happy with what you own. It can go down. The stock market does also go in that direction from time to time. I know the market has recency bias, but hey, look, back in February, we thought we would never be going up. And today we think we're never going to be going down. But it does go in both directions, guys. So
Absolutely.
be careful. Travis, picks for the wedding outfit. Who's your date? I can, probably I'll post pictures of the wedding on the Instagram account. So you can go follow that. It's the pinned comment. I think that's it, Roy. Let's wrap there. What do you think? It's 2:20 a.m. for me.
Yep. Thank you guys for being here. And as always, you guys make the stream a lot more fun. So even when, or especially when Tevis is not high to Celsius and is low energy as a result.
Yes, absolutely. Low energy, sassy AF, dry, cranky Tevis on a Tuesday evening for you guys. We'll see you Friday. And if not Friday, we'll see you Saturday. But either way, we'll see you soon. Thank you, everybody, so much for being here with us, spending your lovely Tuesday evening. Be careful in the market. Enjoy your gains. And we'll see you in a few days. Goodbye.
Later, guys.